Taxes being reimagined for today's world. A world that has changed dramatically. Geopolitical shifts, technological innovation, globalization, new business and consumer demands. These trends are transforming the way tax leaders are thinking about tax. The old country-by-country, tax-by-tax approach no longer works. Businesses increasingly want a strategic relationship with a partner who can travel the journey with them. To a new target operating model with their tax and finance functions. A model that is digital, global, efficient and effective in unlocking strategic value. Welcome to Tax Reimagined, created and delivered by KPMG, enabled by the power of Microsoft technology. A new framework which brings together our tax knowledge and transformation skills, our leading technologies and expertise in delivery across the world to meet the new demands businesses face. This is not a one-size-fits-all approach. It's about deploying skilled solution architects that can work with you to design, implement and continuously improve the targeted operating model and aligns your tax department's vision and strategy with the broader business objectives. From in-house automation to outsourced managed service solutions, this teamwork is a platform for reimagining the future of tax. KPMG is investing $5 billion over 5 years in technology, people and innovation to accelerate digital transformation, training our tax professionals to become experts in technology and solution architecture, and building best-in-class delivery centers, and developing and delivering with Microsoft a suite of new solutions to empower tax leaders and their departments to act collectively and act now. The future of tax is here.
Indeed, the future is here. Good morning, ladies and gentlemen, and welcome to a Tax Reimagined webinar. We are delighted to host you this morning as we reimagine our tax world. And what an interesting time to be alive, where finally tax and technology can converge. My name is Stephen Ganga. I'm an Associate Director in KPMG East Africa Tax, and I'll be your host this morning as we go through the next 2 hours. Exciting to have you here as we discuss what is ahead of us. But first, some ground rules for all of us. For our speakers and panelists, please ensure that your mics are muted and your videos are disabled throughout the session unless you're speaking. The other thing for all of us to note is that this webinar will be recorded for the benefit of all of us who are not able to attend this morning. Our Q&A sessions towards the end, and if you have any question, feel free please to use the chat box, the Q&A section, and we'll be able then to respond to your questions on the go. But at the end of the towards the end of the webinar, we'll give you a chance to be able then to ask a question, and you can use your hand and mute, and we'll be able to engage with you. Onto our agenda for this morning. Couple of things. The way we in such a way that we'll be able then to engage with all of us. And I'm aware that most of us did participate in a technology survey, and we'll be hearing about the outcome of that survey in this webinar. We think about how does the future look like? What is that roadmap? So that all of us in tax and finance, we are prepared for what is coming our way. And as you think about it, it's about bringing the future forward. So we want to hear from our panel in terms of what's their experience? How is their day-to-day like using technology, merging of technology and tax? How does it look like to them? And finally, we'll hear from our CEO how the future then looks like today. Ladies and gentlemen, our first speaker will be our head of tax, Peter Caxton Kenodia, a man who we call a lawyer and an accountant in one. And it's a rare occurrence for us to have this kind of experience. He has over 17 years of experience. He is a lawyer and also a member of ISPAC. One thing about our head of tax is that he's able to speak through things beyond the gray area of lawyers, where they say they don't see black and white, they only see gray areas. And we want to see through his eyes what this looks like as we get into the future. Peter, please open the session for us.
Thank you very much, Stephen, for that very gracious introduction. And for me, it's to welcome all of you once again to our Tax Reimagined webinar this morning. I do realize we have people following us all the way from the United States, others in Europe, and of course, the majority of you are following us from Africa and a special focus for East Africa. So welcome all as we journey together, as we look at what it means to talk about the tax function of the future. Digital technologies are radically altering business and operating models, resulting in round-the-clock and borderless value creation for business. Tax functions need to be ready for this digital disruption wave, which will require them to be prepared to meet the requirements and expectations of business and tax administrations with greater accuracy and efficiency. As a result, our tax function can no longer carry on as in the past. Our departments need to be compliant and ready for changing digital world that we operate in. We are aware that going forward, greater emphasis is going to be placed on the use of data, data mining, automation, artificial intelligence, digitalization of tax systems, and how tax technology can be deployed most effectively. So the key focus will be to design a tax function to meet today's demands and future challenges. Imagine for a moment the possibilities of designing a tax compliance process without limits that automatically performs certain tasks and eliminates manual data inputs. It eliminates wrong calculations in real time, on a real-time basis, and can transmit reports to tax regulators almost simultaneously. That could be in the realm of imagination for most of us for now. To believe become, and has for most people indeed become reality already, because technology is making this a possibility, and tax regulators around the world are embracing this as a new frontier in tax administration. Coming closer home for East African companies, we say the future is already here. It's already imagined. For example, in Kenya, the introduction of the electronic tax invoices in the recent tax amendments regulations will help minimize VAT fraud, since the KRA will access information on a transaction immediately it happens. Therefore, having a future-ready tax function with digitalized tax systems is no longer an option, but a key imperative for every company that is doing business. In Rwanda, Tanzania, and Uganda, the revenue authorities have already automated and pre-populated VAT and corporate income tax returns, online filings, and payment for both domestic taxes and custom processes. Again, with that backdrop, or against that background, we have assembled the program as Stephen has taken us through, and we'll be hearing today global trend function transformation, client technology transformation journeys, and key considerations for getting your tax from our friends in the aviation industry, the pilots, and tell you Please sit back of our presentation as we talk about a tax function of the future. Thank you very much and welcome.
Thank you, Peter, for those welcome remarks. A man that we know is a tech, and in every day when we are faced with endless possibilities, we rush to him. Clive Akora is a tax partner. He's one of those who've embraced technology beyond the tax world, beyond the numbers, beyond the law. He's embraced technology and he's living it every single day. Clive, welcome.
That introduction. And thank you all to this July of this year across East Africa. And during this particular survey, we wanted to measure the performance of the tax functions in East Africa across 6 thematic areas, which KPMG has identified from a review of a number of tax functions across the globe to just determine what the tax function or what the optimum tax function should look like, and also what the tax function of the future should pay attention to. The 6 areas that we considered were governance and risk, people and capabilities, organizational model, process and responsibility, data and innovation, systems and technology. Now, if I may just touch on these 6 thematic areas before we go into the survey results. If we start from governance, now we do know that in the current environment, governance is critical, especially governance for businesses resides with the board. And it's very important for the board to be made aware of the tax risks that the business is facing. From a survey of various board members and various businesses, they identified the various concerns in order of priority that they considered when they were dealing with tax. The specific ones were that from a tax perspective, they wanted to be compliant. They wanted to mitigate the risk. And lastly, they wanted to ensure that their reputation remained intact. You will know, especially from an East Africa perspective, that tax is a hot topic, and every time there is a case in court, it often makes the headlines. And for me, they don't want to be caught on the wrong side of the arm, especially where they're deemed to have done something wrong. The other thing that is important from a tax function perspective is the skill set of the people that are involved in ensuring tax compliance. And this, we look at it from the perspective of what are the skills, what is the education background, what is the sort of the growth path for those particular people within the organization. The other thing is the organizational model. From an organizational model perspective, we look at the tax function from the perspective of where does the tax function sit within the business? Who do the tax leaders report to? And that is critical, especially for given the importance of tax within the business in the world that we live today. The other 3 important issues are process and responsibility, data and innovation, and systems and technology. And what we'll be saying today is that the tax function of the future will rely more on systems and technology to ensure that there's accuracy of the tax data, that the information that is provided to the revenue authority, to the shareholders, and to the other stakeholders is accurate. Now, if we go to the results of the survey that we carried out, we had 67 participants, and these were CFOs, tax leaders, and heads of compliance from 67 countries, and these countries were Kenya, Tanzania, Ethiopia, Uganda, and you can see on the screen the representation of the countries we had in Madagascar, DRC. So very many countries from across East Africa were represented. If we look at the sector, 30% of the respondents were in the food, drink, retail, consumer, logistics sectors. Mining, metal, and natural resources at 22%. Financial services, 21%. Agriculture, 10%. Trade, transport, and tourism, 6%. Technology, communication, 6%. And manufacturing, 5%. We'll put a poll at this point and run a poll. If you just run the poll. Now, I'd like you to respond to this particular question, where we would want to know from your perspective, would the tax function be more effective as a standalone function, department? We'll take about 30 seconds. We're getting there. 15% participants, 23%. We're getting there. Please continue. We're now at 55%. Ten seconds. Okay, thank you for participating in the poll. We'll just end the poll there. We've got 58% of you answered that the tax function would be more effective as a standalone function. 30% say no, and then 13% say maybe. Okay, so that's a very insightful. That's a very insightful result in terms of what you perceive as how the tax function should operate going into the future. And it's very important, especially given what we have seen in the recent past with the sophistication of the revenue authorities, the complexity of the tax legislation, also the multitude of the tax affairs that we foresee. But we also are sensitive that for most businesses are much smaller, and the investment in creating a separate tax department may not at this particular point be an economic decision. Yeah, if you just go on to the next question. Okay, this is a question on tax technology, part of your business strategy. So again, if we can quickly go through this. We've got 64% results of participants. Again, you can see from the results, 82% of you, now 83%, are convinced that adoption of tax technology is the future for the tax function. And that aligns with the results that we've got from the survey of the future of the tax technology business across the world. So if we now just continue to the other survey results. Just 1 second. Apologies, we're just getting the presentation on the screen. Okay, so the next area that we surveyed was on governance and risk. And from the survey, wanted to understand from a board perspective, how often the business surveys tax risks or the tax agenda is put for the board in the board meetings. 72% of the respondents indicated that they surveyed tax risks when a tax event occurs. Now, what this means is that for most people, potentially when they have a revenue authority audit, that's the first time that they evaluate the tax risks, or possibly when something appears in the news, that's when they assess what the tax risk they are facing. But the best case, which applies in only 25% of the cases, is where they carry out regular tax assessments. And regular tax assessments could be through you carrying out tax health checks to determine whether over a period there are any significant risks that have arisen in the business, and how those particular risks are managed becomes a consideration for management and the board. Now, in terms of how often the board is updated on tax matters, 33% of the respondents said that at every board meeting, tax is an agenda. 27% indicated that it's on an ad hoc basis as needed. 25% quarterly, 9% monthly, and 6% annually. From this, we can see that quite a significant number of respondents, about 60%, did indicate that tax affairs are a common factor in the board agenda. The only issue that would be important from this assessment is to determine which of those tax matters are put before the board. Is it issues probably where you have a revenue authority audit and you want to inform the board of what the findings are? Or is it more having a conversation at a board, for instance, what the business appetite for tax risk is, what the business policy on tax matters should be, so that then when management is carrying out the day-to-day running of the business, they can make a decision based on the guidance from the board on the appetite of the board towards risk. Now, on the other item around the organizational model, we wanted to find out how the tax function is placed within the wider business. And we found out that in most cases, the tax function is centralized within the finance function, and they report to the CFO. In about 10% of the cases, the tax leaders report directly to the CEO. And this was largely in line with what we found globally in terms of how the tax function works. Now, two things which may explain this, mostly because tax relies on the data which is generated by the finance function, and therefore there are synergies in having the two functions working together. And also because when you look at the structure of the tax department, you'll see that in 27% of the cases, businesses do not have standalone tax departments, which means that the people within the finance function also carry out the tax obligations. There are instances, 21%, where the tax function is entirely centralized, which means we've got a separate team that deals with the tax issues. And this is mostly where you've got a group company set up, and you'll have a certain group of people, mainly within the group head office, dealing with tax. In such setups, there were instances where 19% of the tax functions were decentralized, and this is where the tax matters were being dealt at each subsidiary company level. 24% generally centralized, and that means that you have somebody at head office, but then you have people at the subsidiary level also dealing with the tax matters. 9% of the instances, the tax was outsourced, which means in these particular cases, you give a third-party person to help you handle the tax matters. These may not be full outsourcing because there are certain instances where, for instance, people will want to deal with the payroll issues. Sometimes they want to deal with the withholding tax issues. But for the 9% of the companies where tax is mostly outsourced, then a significant part of the tax functions were done by a third party. If we then go to the next slide. Again, this is around people and capabilities. And on this particular one, we wanted to look at what are the skills sets for the people that carry out the tax function. And this is important, especially when we're looking at the future of tax, because when you think about tax in the current scenario and in the going into the future, there are certain skills that will be required. We know that we do require the finance skills, but we also know that tax is legal, and therefore legal skills will be required. Of businesses with the volumes of data that is being generated by the business, we also do know that information technology and data specialists will be required. Now, when we look at the businesses within East Africa, based on the survey that we carried out, 94% of the personnel within the tax function were accountants, 4% were lawyers, and 2% were IT and data specialists. The thing that we did note was that there was no formal career development path for tax professionals. What does this mean? It means that organization to sort of look for diversity in their career. And this is an important factor to consider, especially when you're structuring the tax department going into the future. Then when we look at processes and responsibilities, how is the tax process carried out? Within East Africa, what we saw was that most of the functions are performed manually. That means by manual, we probably think about things like doing things on Excel. Some of the documents are manual documents. Somebody has to fill in the tax return by hand. The processes are not documented or standardized. When you look at, there's no tax manual, there's no finance manual, which includes the tax processes and how those are supposed to be carried out. And the responsibilities are not clearly defined. And this is probably the case where the tax function resides within the finance function, or the tax responsibilities are carried out by a finance person. In that particular case, sometimes there are blurred lines about who does what within the tax responsibilities. Okay, now we look at data, and we know data is extremely important when we are talking about tax. And the tax data is derived from the accounting system. And we found that when you're looking at the data for tax, be it you want data to file your tax return, you want data to file your PAYE return, you want data for your withholding tax returns, what we found is in most cases, the ERP systems are not structured to provide data for tax purposes. So when the tax personnel get data from the finance reporting system, 26% of the time, the data requires significant editing to make it usable. 42% of the time, the data requires moderate editing to make it usable. So you're looking about % of the time, the data is not ready for use. And that means there's significant amount of time that is spent in trying to make that data usable for tax purposes. And that time could be used elsewhere, especially in more strategic sort of roles by the persons involved in the tax function. So 29% of the data received from the business is only used to prepare tax returns. 71% of the data is used to generate insights into decision making. So this is more around what then happens to the data that is finally generated. So, and this is a good insight that 71% of the time, businesses use the data that they receive from the business to generate insights. And this is important, especially when now we look at the tax function of the future. The tax function of the future should be able to use the data that the function derives, not only for filing returns, but also to make, to help the business make decisions, especially from a strategy perspective, because the text data is also the business data. And if you can get more insights into it, then that becomes a lot more useful for the business. When we look at systems and technology, now on this particular end, when we look at the tax function of the future, and we look at the importance of data, systems and technology will be critical in driving the tax function to the next level. Now, within East Africa, we did find that 43% of the respondents noted that they had low levels of automation, but the companies were eager to adopt tax technology in their tax functions. So when we compare this to what we saw from a global perspective, in terms of what were the priorities, globally, most companies prioritize investing in people, skills, and then adopting technology. But within East Africa, most companies are essentially prioritizing adoption of technology. And this is important, especially when you look at the low level of automation that the companies have. A good insight, 75% of the companies have a documented tax technology strategy, which is good. And then 25% do not have a documented policy, and that is something that needs to be looked at by the businesses. Now, we've covered the status of the tax function in East Africa across the 6 thematic areas, and we do see where the within East Africa falls. Now, if you're going to have a future-ready tax function, then we have to look at it from the perspective of technology transformation. How do we use technology to respond to the needs of the current business and of the future business? And we're going to see in the next slides how KPMG is assisting businesses to adopt technology to make the tax function ready for the future. Now, and this is where we come to the aspect of tax reimagined. And from a tax reimagined, what we are looking at is that the tax function of the future cannot rely on what we have done in the past, because there are so many trends which are disrupting the tax function. This could be political. We know about issues around the global tax reform. We know about the debate on tax morality. We've seen how there's pressure across the globe for companies to pay their fair share of taxes. And when you're reported that you've not paid your fair share of taxes, then it becomes an issue. The issues of technology, and from a technology perspective, the technology is revolutionizing how things are done. Economic, there are issues around budgets. Number one, do the companies have the budget to employ, say, 5 people to do the tax work, or can they adopt technology to reduce that number to 2? There are issues around what the government is, how the government is responding to the shortfalls in revenue, and then there are social issues, and social issues are especially around how people want to work, especially in the post-COVID era, where most people want to work remotely. If people are going to work remotely, then we cannot continue to have a manual tax system which is relying on using physical documents. We have to essentially adopt technology so that people working from wherever they are will be able to access the data, process the data, and then submit the data either to the regulators or use it for the business decision making. From a regulator perspective, you'll note that across East Africa, be it in Tanzania, be it in Rwanda, be it in Uganda, the revenue authorities are adopting technology in the way they interact with taxpayers. We've had stories about automation of the VAT filing system, where once somebody makes a purchase and you raise an invoice, then the tax authority becomes immediately aware of the transaction. Now, we've had instances of the tax authority using softwares when carrying out audits to the extent that they're able to get a view of 100% of the transactions that the business has carried out over a given period. Now, if you don't have technology to do that, it means that you may miss certain aspects of the transactions, and therefore your returns will be erroneous, exposing you to penalties and interest. Therefore, technology enables the business to have a full view of its transactions, and therefore will be able to be more accurate in its submissions. Now, when we look at tax Reimagined, what does it do? Number one is from an observation perspective, where you're looking at your current business, your current tax function, and how you are currently complying with your tax obligations. That is sort of your current state. You look at what gaps are in your current state, and then by challenging the status quo, streamlining the business, and developing action plans to execute in order to transform your business to be ready for the disruptions that are impacting the tax business. And then you implement the steps that you have developed based on your observation of your current state of the tax business. And this requires that you partner with the various persons, be it technology service providers, be it through outsourcing, be it reimagining your tax function internally. And lastly, you then measure your success story. You come back and do a reevaluation of your tax business to see how does it measure across the 6 thematic areas that we talked about in the first instance. So how does KPMG help in this step of creating a future-ready tax function? We have a tool, and that's the Tax Reimagined tool, which is a series of measurements which benchmark your current tax function against various metrics. So what we'll do is come and give you a questionnaire, a series of questions which you answer. And based on that particular questionnaire, we'll create a report which gives you the status of your tax function against the best practice. It will identify gaps in your tax function and where you require to remediate those particular gaps. Then we help you develop an implementation map, which will also help you to monitor for execution. And then we continue the conversation as you continue to evolve your tax function to make it ready for the ever-changing requirements of the environment within which we operate. Now, even as we talk about Tax Reimagined, KPMG has developed a number of tools that help businesses to be future-ready and to respond to the challenges that we currently face. And at this particular point in time, I will run a video showcasing the various technologies that KPMG has developed to assist businesses comply with the complexities of the regulatory environment.
At KPMG, our tax technology team is reimagining the tax function with the implementation of technology. Combining KPMG's tax expertise and our data analytics capabilities, our tax computation engine extracts data from your trial balance and ledgers, cleans and
Sorry, we run it again.
At KPMG, our tax technology team is reimagining the tax function with the implementation of technology. Combining KPMG's tax expertise and our data analytics capabilities, our tax computation engine extracts data from your trial balance and ledgers, cleans and processes the data, advance your current, deferred, and proof of tax computations in a matter of seconds. The resulting output files are then analyzed and visualized on interactive dashboards that allow your team to have a real-time view into tax KPIs, obligations, transactions, your income and expenses, providing business value to tax managers, and enabling you make data-informed decisions. Additionally, we reconcile your tax obligations and transactions to detect inefficiencies and late payments, giving you confidence about meeting your tax obligations in good time and remaining compliant. Combining technology with our team's extensive knowledge and practical experience, we have developed tools that automate the process of reconciling your VAT, payee, withholding, and customs tax obligations, enable you address your compliance issues with more precision and in a timely manner, including identifying incorrectly filed returns. Tax reconciliation solutions will enable you easily run month-on-month reconciliations, identify overpayments or underpayments and other variances, and avoid the heavy cost of non-compliance that can disrupt your business.
Great. It's an interesting time for all of us. Just think about it, that today you can be able to run the deferred tax right from where you are using a tool. That deferred tax that has been mainly finance and accountants spend countless hours trying to balance, but now you can be able to do it with a tool. But you don't need anyone to remind you about the tax payments, and you have a tool just to do all this for you. The future is indeed here. Thank you so much, Clay, for that presentation, and the passion is indeed visible even as you are taking us through that, and we look forward how those tools will make our world life easier. Our next presenter is a man from the world to us, Aluk Eaki. He's an associate director in our KPMG East Africa Data Analytics team. Have you ever searched for a vehicle? You possibly wanted to buy a vehicle, and when you search for one, in of your social media accounts, then you start seeing a number of vehicles, various models, what you've searched. Or you decided to go for dinner, and you search for one restaurant. In the next couple of days, you keep seeing restaurants popping up, and you wonder, how do these people know that I'm interested in buying a vehicle or going for dinner? It is a work of data analytics. Aluk Eaki dreams, lives every single day dealing with data. Transformation is his main area. He holds an MBA in IT operations. He has worked with over 500 Fortune companies, and we are proud and happy to be associated with him and happy that the world has brought him to us. Aluk, please tell us what you have for us this morning.
Thank you, Stephen. Thank you for a good introduction. Really appreciate that. Thank you, everyone, for joining this webinar and giving us the opportunity to talk about the tax regime, or the future of the tax. Since Stephen has already given my introduction, I would not take much time, but quickly jump into what exactly we are really going to talk about from the future perspective of data or the tax evaluation, what exactly is there. So, I would start with when I started with my career and in banking organizations where I used to meet CFO or the CEOs, where the challenge used to happen in those days were how the tax calculations or the finance calculation used to happen. I, coming from majority of the work I have done in US, or where people were doing a lot of work on paper, Historically, a decade back, how it used to happen was more everything was happening on Excel. People were being doing their data. All the data were being hosted on premise, where every single person working in the finance sector or the tax sector, they were being known as an accountant. So it was very much the process used to be kind of tedious, or everybody was involved into doing the similar task, and there was no organized process, and the things were being taking a lot of time. However, now what has changed over a decade now, what has really changed, the things have been moved from your older systems. It has moved to your ERP system, which is on cloud. The things have been integrated. Now, if you would see, a lot of organization has integrated their system. They have connected their one of the application with another, and they are tightly integrated. So the information are being flowing and floating across easily. Then the other thing what has happened is global end-to-end management. So the processes that has happened, it has been end-to-end. It has been organized, and it has been happening end to end. So these are the certain things that are being coming across, and what exactly why this need has came across. The need because of the disruption in the businesses that has came across, because of the new business models that has came across. Expectation, there has been a different expectations that has been coming across from the customers or employees or the industries. Different needs have been coming across. As our leader has mentioned, there has been a lot of social and the geopolitics has been getting involved into this. So these are becoming the disruptors. And again, the thing that we are today, specifically this presentation would be talking everything in regards to data, where data is becoming a fuel today. Data is the essence of everything. So you would every organization is focusing on data. If you have the right data, you would be able to get the right information. So the big data, then emerging technologies. What are those technologies? Technologies like AI, ML, automation, or your NLP. All of that. I'm going to talk all of these in my future slide. So all of that is being the disruptors. So how KPMG has been helping, what are things what we have found, or from the survey results or the solutions what we have been developed, I would be talking about on the same. All right. So if you would see in the organization, the CFO agenda. Now, the CFOs are been focusing or been talking majority on the 4 functions: the automation, data analytics and insight, organizational agility, and the modern workforce. Now, all of this, how that is being combined, or ensuring that how it is being taken care with the right strategy and the value management, and the risk of compliance, ensuring everything is regulated well. So that is what exactly your the CFOs are being focusing upon, the automations, and which is being coming on cloud, or robotics, machine learning, and things like that. All of that we would be seeing in the further slide, where we are been actually focusing on the data strategy and the governance, which is finance, the tax functions, the integrated strategy. Then the data governance model, the transparent and the ownership. So all of this particular thing, when it comes across, it comes as a part of strategy and the governance. The next thing which has been coming across, the data analytics insight. This is something very important, and it has been, we all are been seeing this in our day-to-day life. Data ingestions, data analytics and transformation, and data consumption. So data ingestion, you must be thinking what this word is being talking about here. So it is nothing but a process of utilizing a data and processing it, which would be utilized for our day-to-day use. Simple example, when you guys are searching anything on a Google, or you are looking anything on the Instagram or Twitter, you are seeing the similar post that has been coming across. So what has been happening, there is an automated engine that has been processing the data, the information you are looking for, and it has been populating in front. So exactly, the organizations are been using all that particular information in today's world, where the financial data, it is getting utilized, which is related to the organization, the external data, which is again useful for the organization, which is coming organization, and the internal information, which is non-financial. All those particular thing is being part of data ingestion. So this analytics, the insight that comes across. So what I really want to really focus upon here is the roadmap of the future finance and the tax functions. So if you would see, these are the survey results what we have got across. The disruption is the key. 76% of the CEOs are agreeing the growth relies in the organization when there is an ability to disrupt. It is very important. Unless you would not change, and you have seen the examples what I have given, from the emerging technologies to the customer needs or the employee needs or the big data. So unless you do not do that, you would not achieve it. So 76% of the CEOs are agreeing to it. Then 78% of the finance leaders are believing that they need a strategic finance. If they do not do that, they would be running out of business. So this is another survey result that is been talking again from the data perspective. Now, 68% of the organizations are again believing it, that data, analytics, and insights are very important for the organization. If they do not achieve that, it would be very difficult for them to survive with the ongoing business. Then 52% of the organizations has already started utilizing, and they are actively using the finance delivery model. They have organized their processes. They have been following the right processes, right approach, the governance across that. Whatever we have just spoken about, they are been talking on that. So, with all this particular thing, how that has been happening? It has been happening with enabling the innovations. So we have to enable, we have to leverage people to facilitate with that technologies. We have to automate everything. Now, not everything can be automated, but the maximum extent the automation is needed. So the manual intervention is so that is something in finance. Going a majority of the leading performance enterprises are being utilizing this particular information, dominating your data. So utilizing the data which is really required for your organization, ensuring the right set of information which is there and it would be utilized in the organization, and putting the right strategies, integrating it with the right systems, and connecting with the system. So that is something very important, and it is important for the organization to ensure and dominate that particular data. Enabling next generation delivery model, ensuring all your outcomes, whether it is coming from your AI, your business analytics, or the processes which are there, ensuring that it is being coming with the right approach, the information is being coming with the right mindset. So that is the next generation delivery model is being coming across. The next thing is refreshing the talent strategies, comprehensive and flexible. Ensuring that focusing on the right talent, ensuring giving an opportunity to people for by having the right set of acquisitions and changing demand, ensuring that they would be, they are getting the right set of opportunities to work on the application tools and things like that. So with that, that sums up my part of presentation on the data analytics. And I would leave you guys with a video where we have been showcasing KPMG is been coming across with the power technology to help your finance function and leveraging you to have the right set of information or the solution and tools and applications with that. With that, I thank you everyone, and here is the video for the same. Thank you.
Connected Enterprise harnesses the power of data, analytics, and insights.
Customers today have high expectations of everything.
Personal data is willingly shared as long as there is adequate trust. In return, they expect seamless experiences which are driven by insight-led organizations.
The Connected Enterprise not only sees insights everywhere, they act on them.
And turns them into opportunities.
The right tools unlock incredible possibilities. Use them to transform customers' interactions.
To make those experiences incredibly personal and frictionless.
Have curiosity in your customers' needs. Let this ignite change and power growth.
Stay ahead of global shifts in geo, political, and social. Measure customer sentiment around the world.
You can really understand the voice of the customer to really adapt your business to be able to engage with those customers in a way that makes the most sense for them and your business.
Ultimately, transform your business.
It's beautiful. Those are beautiful videos. Seeing is believing. Thank you so much, Akmi, for that presentation. It's wonderful. It makes finance and technology clearly match. All the tools that we've spoken about this morning, we will not have that on our own. I'm happy to announce, and we saw that in the earlier video, that KPMG and Microsoft, we have a global partnership. And indeed, this morning we have Adele Inji to talk to us about the importance of technology. So Adele is a service solution specialist from Microsoft. She has over 12 years of experience. She is the tech when it comes to everything that happens behind the scene to make all this beautiful, wonderful, and operational for all of us. Welcome, Adele. We'll be glad to hear from you this morning.
Thank you, Sandeep. This morning I want to fast because we don't have a lot of time. I don't have the luxury of time with you to go around the art of the possible with technology. And coming from Microsoft, I would like to share with you the different journeys and lesson learned from the different digital transformation journey with tax authority across the region, as well as how Microsoft perceived the different priority for tax authorities. The tax authority challenges, as was seen in during the first sessions of these mornings, we are coming from a manual processes, a lengthy and uncontrolled that creates a lot of gaps for fraud as well as corruption. So Microsoft put different pillars to address the different personas in the tax life cycle. And our priority is around the management, the tax compliant, how we enhance taxpayer experience, and the tax employee productivity. In that sense, I want to take one example in our achievements, which is how we address the VAT with what we call the B2B model, creating the e-invoicing system, which integrates with any ERP. So you finally find the tax authority sitting in between the seller and buyer and be able to capture all this mature data represented in invoices. As well as the B2C model, which is having the system and the tax authority sits between the business to consumer and capture the receipts and authorize the receipts before the actual transaction happens. This will enable us to have in our system a quality and mature data where we are able to do the necessary analytics. And the analytics cycle can start from simple descriptive, where we capture the invoices and say how quality reports we have, going through the different classification of being able to say how much goods are sold in which economic sector, going to a deviation where we are able as tax authority to identify the gaps and why this seller didn't claim some invoices where the buyer claimed them. So you are able to identify the gaps here. And it takes you to the latest level, which is the prescriptive, where you are able to predict what's going to happen and be able to proactively tackle the different fraud scenarios. The lesson learned, it's very important, Microsoft engaging with tax authority, that we need to couple technology with three important pillars, which is the legislation, as long as the process, as well as adoption. And you will find a feedback loop that touch base from the technology. Before we start the project, we have to have the legislative in place. And of course, the process will be impacted all along. We will no longer have the same profile for the tax auditor in the future. This all will change, as well, of course, as the ongoing adoption and the need to update the technology based on the adoption and the including of our systems into day-to-day life. Thank you very much, Sandeep, for the opportunity, and KPMG, and definitely you are a great partner of choice, and we'll work together to digitally transform more tax authorities across the region.
Thank you, Adele. And as I say, the experts, men and women of few words and clear, that others come on. But thank you so much for being with us this morning and sharing it with us. Moving on to the next. Thank you, and sorry about that. So moving on to the next on our agenda. Some of you are here with us this morning, and we wanted to understand and hear from your own side, what is the impact of, and we'll with you in the next videos. Please see the videos.
Now, when we're considering investment, technology plays a big part. Increasingly, it has been considered as a disruptor of traditional businesses, looking at things like Internet of Things, artificial intelligence, and even data analysis as one way in which we can leapfrog the efficiencies and the productivity of business. For us as investors, technology helps remove the ambiguity or the hunch aspect of making business decisions.
In Superform, we've used technology a lot, and technology has helped us smoothen our processes in various areas. This includes monitoring operations and production, the whole supply chain process, and as well as finance. And in finance, of course, we have the tax unit. What we've done is we've tried to use technology to ensure that we are as compliant as as possible, as compliant as the regulators will need us to be in all the areas that concern tax matters. And we've used certain key drivers in technology to help us achieve this. The first one I'll discuss with you is our ERP. We've invested in a very good ERP, SAP to be precise, and we've tried to ensure that all our accounting, all our data entry goes through SAP as a control tool. And what SAP does is that it helps us ensure that all this information, especially the tax data that goes into SAP, it is captured in a well-structured manner, and anytime there are errors, we're able to notice them real time. Yeah?
One example of the automation projects that we had to work on, purchase requisition, all the way to the issuance of PO. It was largely manual, leading to a lot of times to data loss. But once we automated this, it improved the efficiencies. It made sure that we were able to analyze our data properly, and we were able to make decisions from such data.
As the group's operations grew from one generation to the other, the daily transactions exponentially grew from tens of transactions a day to 1,000 transactions a day. Likewise, the tax compliance scene also evolved dramatically. Back in the day, a key concern records taking
that are being produced at that particular time. And on a daily basis then, data can be collected together, and we know how many tons have been mined, how much of that or how many of that has been pushed through to the PCP plant, and how many tons of HMC has been produced, and what has been fed into the MSP, and ultimately to what has been produced in terms of the real product, which is ilmenite, silicon, and rutile.
Indeed, this is our reality today, and the impact it has in our business. Now, reimagine tax being embedded in our business every single day. We shift gears now, and we ask ourselves, we can transform from the current perspective, we can transform our business, we can embed technology and bring tax technologies to our business. But what is the impact of that when it comes to the tax authority? Across East Africa, tax authorities are in different stages of embracing technology, coming up with tools, efficient collection mechanism. We ask ourselves, what is the impact of end-to-end tax collection mechanism, and what is the impact in our business? The next discussion, we'll have a panel, which will be led by Sandeep Main. Sandeep is a man in business. He's our head of private enterprise. He's a director in a tax business. He uses his skills in tax to imagine business and support various areas. He's the chair of advisory board for ACCA, and we've seen him in action every single day, supporting business to bring the best of that. Sandeep, over to you as you take us through the panel discussion.
Thank you so much, Steve, and good morning, good afternoon, good day to all our delegates. Allow me to first introduce our first panelist. We have Ellen Asang, Commissioner, Head of with the Uganda Revenue Authority. She has over 17 years of experience doing technology and infrastructure work within the Revenue Authority. So welcome, Ellen. And then we have Hakamba Wangwe, who's the Chief Manager. I think most of you must already know Hakamba, those like you, those of you from Kenya. She's also in charge of the tax information management system operation within the Kenyan space from a KRA perspective. And she has over 20 years of experience working with Revenue Authority and in the digital space. And then we have our next panelist, who is Fred Carrara. Fred Carrara is the head of operational policy and business analysis with the Rwanda Revenue Authority. He's also tax project manager, and he has over 19 years experience working with Revenue Authority in Rwanda. Welcome, Fred. And then we have Eunice Lihutuka. Eunice is actually a manager with the Tanzania Revenue Authority and has been working, has over 15 years experience working with transformation within the Revenue Authority. So welcome, Eunice. And finally, we have our very own Peter Chambade. Peter Chambade is a tax partner with KPMG Uganda and has over 20 years experience. So cumulatively, the panel here, including my own experience, is over a century. And this is what we intend to share with our attendees today. I'm going to request all the panelists to come on camera as I take down this screen. All right, thank you so much, and good morning, everyone, once again. So we have talked about the survey results. Clive took us through what our responses were, and we had a good number of responses from across the region. People telling us on the importance of technology. Some companies not really yet there. Some trying to make a way forward within their businesses in terms of technology. And I think this really depends on the different life cycle of a business. So you could be in a startup phase, you could be in the growth stage, or you could be in the maturity stage. So maybe to begin with, and I would like to hear from at least from each of the revenue authorities. So in the last, I'm going to start with you, Aline. In the last 5 years, what has URA done, from a technology transformation perspective? Just very high level. Aline, maybe start with you.
Thank you so much. Good morning, viewers. My name is Aline Nontalin from Uganda Revenue Authority. And in the last 5 years, our digital transformation journey kicked off with the introduction of the e-commerce solution. Data about our taxpayer behavior. Now, when we got this data, we went into trying to fully optimize it. So we built a data warehouse business intelligence solution. This was mainly to help us detect non-compliance. This was integrating data across URA and across a number of third parties. Then we do this in phases of transformation drive. The next one was aimed at really improving voluntary compliance through projecting and expected revenue. So within this phase, we ended up introducing systems like the digital tracking solution, which is really a track and trace solution enabled by digital stamps. These stamps are appended onto excisable goods manufactured within the country, as well as those being imported into the country. Again, the whole driving factor is visibility. We've also done the electronic physical receipting and invoicing. This is really to enable the businesses in Uganda, help them uptake technology, because this solution gives them a platform where they can maintain digital records for all their different sales. And as URA, then we pick copies of their receipts and invoices to facilitate us in managing the VAT. Of course, we've also undertaken a couple of process improvements. For example, improvements within our tax registration. Previously, it would take about 48 hours to get a tax identification number. Now, within our process improvements, we've integrated systems. We've integrated with other agencies like the National Identity and Registration Bureau. So once we pull the data from another government agency, and then we are able to issue an instant TIN. We've also built risk management modules to help us rank the taxpayers based on their level of risk. And based on their level of risk, we are able to differentiate services to them. All these initiatives are really geared to ensuring we meet our bottom line of collecting the revenue and delivering effective service delivery. Thank you so much.
Thank you so much, Aline. And I think that is majorly what's happening in the other revenue authorities. But maybe Hakamba, from what Aline has mentioned, is there anything different we're doing from a Kenyan perspective?
Basically, I think Aline, she's covered part of the work that has been going on, maybe even earlier than the past 5 years in KRA. But maybe when it comes to automation of the business systems, what we are currently working on is now progressing towards integration of the same business systems, both internally and also with other organizations who may be holding data that we may have interest in when it comes to taxation. So just for us to be able to have better visibility of transactional data across board, we have been progressively actually working with various entities, financial institutions, to be able to see how we can to enable us have automated solutions that will avail this data to us. But in addition to that, maybe what I can mention, there are two things. We are currently in the implementation of the tax invoice management system, which is currently under rollout. And then also in the last 2 years, we also did automation of the taxation of the digital economy, because we realized that our focus has before been on the resident taxpayers, but now we have expanded our scope to include non-resident taxpayers to be able to expand our tax base, enhance our compliance, and increase revenue. But all this, even as we look at automation, we are also looking at improvement of administrative and legislative processes, because we realize that these are integral when it comes to the automation processes, because most of the laws, for example, were based on the traditional regime, which we know, but when you're considering technology, then it has taken us having to review our laws so that we can be able to align to advancement in technology, basically.
Yeah, thank you so much, Hakamba, and I know we'll be talking more about that. I do know RRA and TRA are also quite advanced in their automation of the certain processes and transformation. So maybe, Fred, before we move on to the next question, maybe you can give us a bit more about what RRA has done in the last 5 years.
Yeah, thank you, Sandeep. Good morning, good afternoon, everyone. I'm Fred Karara, as you said, from Rwanda Revenue Authority. We've been able to implement a number of reforms in the last 5 years, ranging from registration of taxpayers, which is done online. And we've been able to do this with an integration with the Rwanda Development Board, which is the custodian of the business registration, with an objective of creating one-stop shop and issuing one number, that is the tax identification number, trying to avoid multiple numbers that confuse taxpayers while honoring their tax obligations. Then we've been able to introduce electronic filing of taxes and payment. We've been able also to implement the online tax clearance applications. Basically here in Rwanda, when someone is bidding on a public tender, once he's participating in a public tender, he or she is obliged to produce a tax clearance. So that is also online. You can get it online. We've been able to also implement the online appeal lodgement. That's appeal and objection. The lodgement of appeals and objection are done online. So this is reducing turnaround time for the taxpayers visiting other offices. And we've been also in a position to implement the issuance of notes of assessment for non-payers that is sent online after the submission of your tax returns. At the end of the statutory due dates, these notes of assessments are sent online, and the taxpayers can respond whether making a payment or when they have any queries to react to, they can do that with respect to what they have received online. We able to implement the electronic billing machines. This is an invoicing system which focuses on VAT in the past, VAT taxpayers, and this is a good tool that has helped RRA improve its performance on VAT, and it has also helped to reconcile between the input and output VAT at the end of the filing period, thus leading to the appropriate refunds and also the correct VAT due to government. We've been also been working around the issues of handling the audits using the risk profiling engine. So our risk profiling engine has been able to identify the high risk taxpayers, and then this has reduced the multiple visits to our office, to taxpayer offices or premises, if you like. So we focused much on those that are highly risky than auditing everyone that is in our tax net.
Thank you so much, Fred. I think that's a lot that RRA has. Do you have anything additional to say from a TRA perspective? We have heard what URA is doing, what RRA is doing, and has done what KRA is doing. Is there anything additional that TRA has done, maybe in about a minute or so?
Thank you very much. Good morning, good afternoon, everybody. For TRA is no different from the others. We have been streamlining our processes and the optimization of automation opportunities so as to encourage the self-service for the sake of time. Maybe I'm going to speak of the ease we have validate the invoices, and we found that previously we had like 1.2 trillion negative, where the repayment side was higher than the collection. But currently you can just see for the 3 months, if you compare, is around 493 billion. That is on the positive side. That is remarkable remarkable achievement for the TRA. But as well, we have our online auction that people use to make the auction through online, can just see all the auction, the goods all over the border stations. And as well, we have got other upgrades. For instance, we currently collect our property rate through electricity bill. We used to have the long queues for the payment, and the cost for collection was very high. But after that, currently we just collect through electricity bill to reach everybody. We see a remarkable contribution on the collection and on the compliance side. So apart from others, we have the ATSMS migrating from paper stamps to electronic tax stamp. We have seen the results. They are positive ones, online registration, and as well as interfacing our TRA registration for companies, interfacing with other government properties. Maybe for now, I end up here, but those are some of our transformation journey. Thank you very much.
Thank you so much, Eunice, and all the other panelists. So clearly, ladies and gentlemen, the revenue authorities are far ahead in terms of automating their processes. They've talked about the transformation they've had over the last 5 years, but maybe going to you, Hakamba, there's always been a challenge, I know from taxpayers, that is our revenue authorities actually benchmarking themselves against global best practice. So is this something that you're borrowing from, out there, or is it something that you're implementing locally? How do you decide what portion or what element of the tax must you automate, and how do we benchmark against global best practice? Hakamba?
Thank you, Sandeep. So basically, what we normally do is identify our gaps. Once we identify our gaps, then we see what other jurisdictions have done and what we can borrow from them, especially when you look at the implementation in East African countries here represented. We see because we have so much in common when it comes to the behavior of our taxpayers. And so their solutions, basically our solutions are normally geared to our local, maybe a setup. So what we do, for example, if we look at e-invoicing, which is what we are already implementing, we have had various engagements with RRA, URA. We have also had engagements with TRA, especially when it comes to their engagement with third-party entities or other government entities. We've seen that they have also done really well to be able to integrate not only their revenue authority within their business systems, but also they've been able to integrate with other government departments to be able to leverage on the data that is available between the systems to improve on revenue collection. So why I'm mentioning the East African countries is that we have had these engagements based on our areas of interest. But if we go further, maybe in Africa, the other country that we normally benchmark on a lot is South Africa. And for South Africa, not only on many aspects, by the way, for various implementations. And we also reached out to international organizations. So apart from jurisdictions, now we are looking out to OECD, we are looking at ETA for technical support or technical assistance when it comes to other implementations that we are doing, like the taxation of the digital economy, because we realize that this is a new area that many do not have the experience in, but we are all working together to build the experience towards this new area and being able to improve on it. So we have the international organizations, we have the jurisdictions which we consult in, and we also participate in very technical forums that help us be able to map our way forward, especially when it comes to the digital transformation and automation of our business systems.
Yeah, thanks, Akamba. So at least it's good for the attendees to know that KRA is not just operating as a silo. You're actually coordinating with URA, TRA, RRA. So there's a lot of sharing of information, a lot of sharing of how someone has done something in terms of transformation. So that's actually something I also didn't know. So good to know, and good to see that revenue authorities are actually collaborating with each other. But moving to you, Fred, you talked about the many transformations that you've done from a revenue authority perspective. What would be these benefits to you as a revenue authority of transformation? And do you think there are benefits to the taxpayer as well? You're a mute, Fred. Yes.
Oh,
thank you.
Sorry. Yeah, thank you. Of course, the collaboration within the revenue authorities, as my colleague Akamba talked about, there is also a framework through the East African Revenue Technical Committee, ERTC, that really helps us to engage as sister revenue authorities to learn from each other. Then when it comes to benefits, as you clearly put it, once we learn from each other, then we're able to serve taxpayers across the East African community. Remember, these are taxpayers that are doing business across the East African member countries, and you support them in a way that they enjoy working with a revenue authority in the sense of honoring their tax obligations through, of course, using the digital platforms available, filing their taxes online, filing their acknowledgements, and then also getting their queries responded to via SMS and emails. Then, in terms of the other benefits, there is a reduced turnaround time visiting RRA offices in the perspective of Rwanda, both within Kigali, where there is headquarters, and also other parts of the country. So basically, the turnaround time, the cost of complying is reduced in a way that they don't have to submit the hard copies of their returns, which is a cost to the business, but rather file everything online. And also the cost of transacting with us moving around offices to pay their taxes is a huge cost. So this has been achieved through automation. Thank you.
Thank you so much, Fred. I would like to shift gears and move to Peter Chambate, one of our partners in KPMG Uganda. And possibly is true, but from a taxpayer perspective, what is the feel? Is this new automations unleashed by revenue authorities? Like, for example, in Kenya, we have the TIMS that we need to comply with. There is a cost element to that. And sometimes it is expensive, not only in terms of the cost of the asset, but possibly even in terms of implementation. What are your experiences from a taxpayer perspective, Chambade?
Thank you very much, Sandeep. Without question, the automation of tax systems by the tax authorities across the region has made tax compliance easier and convenient. And there are a lot of benefits in that. Taxpayers can now pay their taxes 24/7 anywhere in the world. Because if I take my experience over 20 years ago, one of the most painful days was the tax filing day. When you are filing the monthly returns, for example, or the annual returns, where you had to go and line up in lines to ensure that you file these returns on time. And many of the taxpayers would have to move miles and miles to go to different tax offices to do that. So automation definitely has brought in cost efficiencies, since it cuts out travel costs and time wastage, and it avails flexibility to the taxpayer. We have also, as we have heard, the new technologies have also provided some direction to taxpayers as to what is required for them to do, which then makes return filing easier and has helped to improve quality of our returns. However, Sandeep, you talked about cost. Like all new technologies, the implementation can be an expensive process. So while the tax authorities are doing this in the best interest of the taxpayers, uptake of these technology cost solutions definitely comes at a cost. And in some cases, the cost is quite significant. For example, Alan talked about the electronic physical receipting and invoicing system. And one of the avenues to achieve this is a system-to-system integration. This is not cheap. And many other technological solutions may not be as cheap and affordable by most of the taxpayers. So it would be useful if the revenue authorities could think of subsidizing or consider introduction of tax breaks on the costs incurred, which would then scale up the uptake of new technologies. In my interaction with many taxpayers, that has come up. Also, taxpayers have experienced sometimes low connectivity and challenges with internet speeds and the high cost of internet, because most of these solutions are web-based. This is an area that needs to be looked into by the tax authorities and the related governments to provide better experience to the taxpayers and improve compliance and revenue collection. Thank you, Sandeep.
Thank you so much, Chambade, and I think those are very good insights in terms of from a taxpayer perspective. So happy with what revenue authorities are doing, but can we also get some breaks from a taxpayer perspective? And I would encourage our participants to ask any question that they might have, for the panelists during today's webinar. So Eunice, if I may ask you a question. So we have talked about taxpayer challenges, but what about from a revenue authority perspective? I'm sure these automations did not just, were not just implemented overnight. Is there anything that maybe you have done, any challenges you have experienced, and then what did you do to mitigate them?
Thank you very much. Yes, there is some challenges because as you prepare in the journey of transformation, first of all, some automation need the integration between your tax administration and other institutes. So it determines a lot the level of automation in the counterpart. But as well, sometimes you may find the counterpart that you wish to for instance, to integrate or interface the systems has capturing different information than the one you're keeping. Sometimes also we got partners in transformation, like for instance, in EFD, we required some like EFD suppliers, the mobile network operators, and sometimes you need to enter into service level agreement. To service them sometimes is difficult. And as well, interdependence of processes. You may find that you're now having the e-filing system, but for the refund module to work effective, you need to complete the debt management module. So you find sometimes in a midst of position that you need everything at once and you need to prioritize them, and you cannot run itself unless you finish all the modules. So that one is also a problem, but in managing the transition period, is also a problem. Sometimes as you in the transition period, you may find that because not all the modules are completed, automated, you may find sometimes you have to make some manual adjustments, and sometimes you may ask some of the processes, can I procure the whole, or should I maybe developing self? But you may find that the needs may be not suited once you procure the whole automation for certain processes. But unless they take off challenges, sometimes in the user acceptance test, you see that the system has performed well, but during the life and the rollout of the system, you may experience some of the problems that you didn't just see them during the UIT and maybe in the pilot stage. But all in all, we need some trainings and to ensure that everything is intact. To resolve all this, sometimes we take a long pilot period so that we can see all the challenges and being able to just take off them. Then sometimes we use the consultants that we used to do previously to train others, the taxpayers, because sometimes you may find on the taxpayers side, the level of automation is very low. So it's difficult for them to capture and everything. Sometimes also the perception, others, they think that once I enter in the tax system, I procure this, training them with some of our, like we do in KPMG and others. That's all. Thank you very much.
Thank you so much, Eunice. So clearly, even revenue authorities face a lot of challenges. And maybe moving to you, Aline, as you talk about some of the challenges from a URA perspective, very briefly, I think a major question here would be the informal sector. So would these technologies and transformations also help loop in the informal sector, as you also tell us about the challenges that you have faced from a URA perspective?
Thank you, Sandeep. In slow adoption of our solutions, there's sometimes it's a perception thing, a fear of the unknown by the taxpayers to quickly adopt what URA has done. And what we do about that is to involve particular focus group taxpayers during maybe the requirement documentation as well as part of the testing. We involve them, pick their views, so we move the journey together. About taxpayer awareness and sensitizations, in some cases we actually run campaigns and reward early adopters of some of the technologies we put out. Now, regarding the cost, yes, technology comes with a cost sometimes. What we've done in the past, specifically for our digital tax stamps, we've had the government come in and purchase the stamps, the first stamps for the first year for the taxpayers. as a way of making sure they adopt the stamps for the manufacturers. Then, of course, internally, when you do all this automation, you get a lot of data. There are challenges with security. Then ICT security becomes very key to your operations, because in some cases we are integrating with particular taxpayers, big taxpayers in URA. So what we do is we've had to refocus and ensure we have enhanced security. Regarding the internet reliability, what we've actually been doing is partnering with other government agencies to try and see how the internet costs, the reach across the country, as well as the costs can come down. That is in line with the challenges with automation. Now, moving on to the informal sector. Yes, indeed, the informal sector is a challenge in Uganda. There are some subsectors which contribute significantly to GDP, but never contribute very little. For example, we have the grain millers and starch products. They contribute, according to our statistics of 2020 to 21, they had 10.2% of our GDP, yet in tax terms, they only contributed 1%, implying there are many players therein that are not part of the tax system. And what we've done as a revenue authority, one is to harness and use third-party data. In Uganda, we have local authorities, like for Kampala, we have the Kampala Capital City Authority. Now, we interface with the local authorities, pick their data, because these authorities are mandated to issue trading licenses to different traders within the city, within the different towns. So what we do, we match the data and compare our separate registers to try and identify who don't we have. Then we've also undertaken some initiatives to do like a value chain analysis from a product. Take an example of a finished chair. Or any furniture item. We'll review who is the carpenter, then we work with the carpenter to find out who is the wood supplier, who is the transporter, etc. This is all in efforts to make sure that across the whole ecosystem, we can identify everyone. But this highly depends on cooperation of, in that example, the carpenter. It is an initiative we've started, but it hasn't moved as fast as we thought. But of course, we continue to do many stakeholder engagements. Many of the informal sectors have umbrella organizations. Like you find maybe a team of the border borders. I don't know whether you know about border borders, but we have this border borders. They have.
I'm sure we have them across the region.
Okay, yeah. They have associations. So working with their associations is easy to try and realize who you don't have on your register and bring them on board. But it's all about negotiation and the partnerships. In Uganda, we also have the Investment Authority. Government is focusing in to improving the small and micro through the Investment Authority. So again, we are trying to partner with the Investment Authority to realize who are these persons and bring them on board. In terms of taxation, we try to get simplified ways tax handle for the micro taxpayers we have on the register, where they just, for example, for filing, you just enter your TIN and turnover, and you get both the payment registration and the return filed. We also focus in, when it comes to taxpayer education, for the small, we go out really to sensitize them in a particular way. We don't do one size fit all. And then recently, we've also, not recently, but we've been doing targeted reach outs. Think about, we have the fishermen communities. So we move out, we have a mobile office, it's called Our Tujenge Uganda. We move to the shores and meet these people from their space and engage them about taxation. That has helped a bit. I can't, informal sector, really, many of the players are within the agriculture sector. And in agriculture, as you know, is a backbone of our country. There are very many players. For this, we've tried in the past to introduce a withholding tax. For example, if a taxpayer or an individual involved in agriculture supplies their produce somewhere, a small percentage was withheld as a way of making sure that also the supplier pays tax. But sometimes this wasn't faced a lot of protests and political pressure, so it was relaxed, but it was one of the ways we were trying to manage the informal sector. Lastly, I want us to, when you think about the informal sector, sometimes we always see the informal as those small unregistered, but there are those informal sector players that are driven by the formal sector. If you get what I mean, you find Sandeep there, highly formal with his business, but within his enterprise, he has many little small informal businesses that are not on the table. So we need efforts to try to identify these formal persons who are drivers, key players in the informal. And this is still just on the drawing board. We need players like maybe the banking sector, look at follow the flow of money and follow the banking information to identify those. That is how we are handling, as well as how we're planning to handle it. Thank you so much.
Thanks, Nadine. Clearly a lot, you're doing a lot to loop in the informal sector. I can see all the other panelists just smiling. But maybe moving to you, Hakamba, as you also tell us about what we're doing from a Kenyan perspective. I heard a lot of collaboration from URA with different associations, a lot of support from the government as well, going to the grassroots, setting up mobile tax units. It's really amazing. So well done on that, Aline. So Hakamba, from a Kenyan perspective, what do you think we're doing to then try and loop in the informal sector? And then as you answer that question, what happens to a business that has not yet implemented technology, is not using analytics? What will happen to that business into the future? I'm talking about the next maybe 2 or so years. Hakamba?
Okay, thank you. So basically, I think the starting point is identifying that not only the revenue authority, but even the taxpayers at different levels when it comes to technological advancement, so that we have some taxpayers, we actually have many taxpayers who are actually ahead of the revenue authority when it comes to the technology that is deployed. But we also recognize that we have a lot of our taxpayers, as you mentioned, that are largely in the informal sector, probably manual. So what we do as an authority is segment them so that we're able to identify these taxpayers who may have challenges when it comes to the tools that are being deployed by the revenue authority, so that we facilitate them, that despite them being largely manual, they are also able to comply and use to some extent some tools that have been deployed by the revenue authority for purposes of tax compliance. So to just give an example, KRA has, for example, the M-Service app. It's an app that basically helps the taxpayers who may not be very tech to be able to use their smartphones, to be able to register and to be able to file simplified returns when you're looking at the monthly rental income return, and also when you're looking at the turnover tax return, they can be able to file their returns by use of their smartphones, basically. So what we are doing is, one, segmenting taxpayers, deploying simplified tax obligations, and also simplified tools to facilitate the taxpayers to be able to come on board and comply. Now, the other thing is that our revenue systems also have modules which, in the event taxpayers are not able to sufficiently use the tools that are on the portal, for example, on their own, then they can approach the revenue authority. And for this, we have the taxpayer support centers countrywide, where a taxpayer can actually visit in the event, for example, they do not have network connectivity or are having challenges in one way or the other being able to use the tools. And from the back office, the KRA officers can be able to assist them, be able to use these tools or to do the functions that they need to do. But also for taxpayer education, we still continue every week. We have the weekly taxpayer education sessions where we educate our taxpayers on being able to use these tools themselves so that they do not depend on the revenue authority so much. Lastly, maybe having the tools that have, when we are looking at the network connectivity, because when it comes to now transmission of returns, for example, transmission of tax invoices, then the next thing that we are looking at that is key is being able to connect to the internet. Then we also still look at our taxpayers and see those ones who may not have a problem when it comes to network connectivity, but some may have a challenge. And for these ones, we have tools for them that they can either be online or offline, or the tools that have online and offline capability, so that we can also address that challenge where intermittently maybe someone might not be able to reach the organization, to be able to file their return offline, just come to the system to upload, generate their invoices offline, mitigate business continuity, but at the point where they need to transmit the invoices, then they can connect to the internet and transmit the invoices. So this way we address that concern that we have, but then also working at tax-based expansion so that we can identify the sections of the informal sectors. As Eileen says, it doesn't necessarily mean that these taxpayers are small, so that we can be able to viably bring them into the tax base. Thank you.
Thank you so much, Akamba. So clearly looking at the supply chain end to end is what I heard Aline saying, and what I heard probably what all the other revenue authorities are going to be looking at into the future. But moving to you, Eunice, so predominantly tax has been done by accountants and my fellow accountants, and then we have the lawyers. But do you think there has to be a shift in mindset in terms of who do we hire now, since we're moving towards technology, analytics, data scientists? What have you seen in your space?
Thank you very much. As we modernize and automate, we see how we need now to have some multi-skilled person that can be very flexible using the technologies as well as other things. As you can see, only being accountant as I am is not enough for the current perspective. We need to be multi-skilled, very skeptical. We need now to migrate to the data analytics. We learn the new things, how we're gonna do the things, because we are gonna receive many data. As for instance, in TRA currently, there is the International Data Center receiving all the calls, the messages and everything. As we migrate to transforming the digital tax, we need the person that is conversant with data analytics. And what we have learned from the previous presentation really has to happen. Thank you very much.
Thank you so much, Eunice. And Chambade, from a professional firm perspective, what has been our experience?
Come again? Sorry.
I was talking to Chambade. Are you? Yes, there you go. Okay.
Thank you very much, Sandeep. From my experience, of course, traditionally, we have generally had accountants, lawyers, and finance specialists becoming tax professionals. But as we all know, currently and in the future, technology and big data specialists are going to be needed in the professional firms, which means that at KPMG and other professional firms, then we need to look out for people who are good at artificial intelligence, data analytics, blockchain technology, Internet of Things, and of course, cybersecurity. And these will have to work hand in hand with the tax lawyers, the tax accountants, the customs professionals, who also have to continually be equipped with information technology skills. So those who are already there, the equipping with technological skills is critical also. Of course, as already highlighted in the discussion we have had, the tax authorities are moving forward in hiring talent in this direction. I know specifically in Uganda, there is a new unit that has been created, which I believe Helen is part of. And also, in line with ensuring as professional firm that we are aligned to meet the current challenges and future challenges, to be able to provide solutions to our clients. At KPMG, we have embarked on a journey to change the mindset of the professional industry. We have hired data scientists who bring the knowledge of machine learning, artificial intelligence, and programming, which, when combined with our tax experts who have rich knowledge of the tax environment, we can then produce these tools, like some of the examples we have highlighted in today's webinar, ultimately add value to the taxpayers. Thank you, Sandy.
Thank you so much, Chambade. As we come to the top of the hour, I would like to give a minute each to each of the panelists just to give our parting shot. And since my panel is so balanced in gender, I'll start with the ladies. Hakamba, maybe you can go first.
Thank you. Just thanking you also for this opportunity to be in this session. We've been able to learn from each other and definitely learned from KPMG. And just knowing that the future of tax is tech, we really look forward to future engagements where we'll be able to marry, especially the transactions in the business system, or what's happening in the business systems to what's happening in the Revenue Authority, for us to be more efficient in everything that we do. So thank you.
Thank you, Akamba. Aline?
Wow, okay. Thank you so much, KPMG, for organizing this sharing session. My last comments would be, we are in the digital era, and in this era, there's such a valuable asset due to the insights and knowledge it can give to businesses. Businesses that have been successful have mastered the art of optimally utilizing this asset. As revenue authorities and other businesses, we must keep moving, leverage technology to create efficiencies and enable us use the different data insights. At URA, we keep innovating better ways of using this technology to improve the way in which we are serving, as well as to simplify our customer journey maps. With technology, technology is the future and data insights are key. Thank you so much. Once again, it's been a pleasure.
Thank you so much, Aline. Eunice, over to you.
Thank you very much. I won't be far from my fellows. We appreciate for this moment. We've been learned a lot since morning. But panelists, we've learned a lot also from them. We see the technology will guide us to where we need to reach. As we can see, everything we are doing, the business, the taxes, systems, technology is unavoidable now, and everyone has to learn to take it and to grab it. The resistance to change amongst us should be not part of it. As we reach wherever we wish to go, the technology will take us through. Thank you very much.
Thank you so much, Eunice. Fred, over to you.
Yeah, thank you, Sandy. Thank you, KPMG. When you look at the benefits taxpayers are enjoying, or businesses are enjoying, from the greater convenience of paying taxes, using mobile telephone, using internet, and reduction of paperwork, all that is kept within our systems. So when we go tech, we are looking at data analytics. We need to focus more on data analytics, looking in the perspective of the 4 core tax obligations, registration, filing, payment, and accurate reporting. Based on that, we have a lot of data coming into our systems. Then we have to use more of data analytics in order to achieve the intended objectives. As RRA here in Rwanda, our reform journey is not a destination. It is a journey we take, and we continuously reform until we can't reform anymore. So ours is just to continuously reform towards simplifying, laws, our forms, and ensuring the taxpayers incur less cost while transacting with us. Thank you.
Thank you so much, Fred. And Chambade, over to you for your final remarks, your parting shot.
Okay, thank you, Sandeep. And thank you, everyone that has attended this webinar and the panelists. We are all aware that the world and the environment we are operating in is changing very, very fast. Digitization is on the increase in operations of all our stakeholders, be it our customers, be it our suppliers, be it our regulators, and others. From what we have shared today and what we know, the tax authorities are also moving very fast on technological transformation of their systems. So, to remain compliant and to be able to mitigate the tax risks and be able to unlock and preserve value of our businesses, we need to reimagine the way we do things, including management of our taxes. This will help us to ensure proactive management of our tax affairs, because proactive management of tax affairs is the way to go, because postmortem does not help, as we are aware from a tax angle. If you handle tax issues from an historical perspective, already interest penalties would have been accrued. So what have we done at KPMG? We have combined our technology transformation and tax compliance capabilities and a new tax framework, which is Tax Reimagined, which we are discussing today. Under this, we assist clients to develop a strategy of their tax functions and help them in designing a target operating model to help in better execution, reduction of costs, improvement of quality of reports, authorities, to other regulators, and to their internal management. And this helps to unlock and preserve value, which we all need for our businesses. In conclusion, the future of tax is tech. We all need to embrace it. Thank you.
Thank you so much, Chambade. I think for me, just to thank each and every panelist for taking time off your busy schedules to be with us today and to share your insights I've attended today. And with that, I'm going to request Steve for the Q&A. Thank you so much. And as we get to the end of the session, Steve, over
Thank you,
to you.
Sandeep, and a big clap to our panelists. It's been and listening to you makes us realize that there's so much information that is out there. There's so much you're doing in that space, and that's wonderful. So we've learned, and we continue learning every step of the way. On the questions, I'll pick 3 questions. I know a number of these questions have been answered live, but I also encourage you to keep posting any question, any comment that we have, and we'll pick it up. So I'll start with the first question. Thank you, Aaron. And you want to know from Adele what solutions Microsoft intends to introduce to our local tax authorities to manage and optimize tax processes and how they intend to do it. Adele, if you could please pick up that question.
Yes, thank you. For the example I mentioned in our session today, which is the example of the VAT, in the future, by implementing these solutions, you will be able to automate the tax declaration. So the taxpayers will no longer have the freedom to submit their declaration. However, they will have pre-filled declaration, which they confirm because, for example, tax authority will have all the insights. This is one example only. We engage on the processes as well in coordination, of course, with KPMG, our partner of choice, to have aligned the different models, whether the country would like to have like intermediary supporting the the invoices validation and so on. Thank you.
Thank you so much for that response. The second question is from Celia. Thank you so much, Celia. The question goes to TRA. Are there any further plans to expand bandwidth on your e-filing platform? The system is quite difficult to use, with it hanging, terribly making it difficult for taxpayers to come on time. Over to you in Tanzania.
Thank you. I've noted the questions. It's true that we had a lot of problems when it comes to sufficient bandwidth and low server capacity, but we have just rubbed up into high availability data network that we have rolled out, and we have some of the processes in the high availability network. As you can just see, the EFDMS is currently accessed through high availability network, and other system will be taken slowly. The high availability network center will improve the situation, and we believe that sooner or later we are going to have the very stable network, and you won't experience the problem we experience now. Thank you.
Thank you so much, and indeed it's good to hear that. The last question goes to Rwanda Revenue Authority. What is the role of authorities in ensuring not only inclusivity, but also friendly approach when dealing with their taxpayers?
Hello?
Yes, please go ahead.
Yeah, I didn't get the question properly. Could you restate it?
All right. What is the role of authorities in ensuring not only inclusivity, but also friendly approach when dealing with their taxpayers?
All right. To begin with, I think you need to create this this collaborative engagement with taxpayers in every project reform that you undertake, so that they are part of this entire ecosystem, to the extent that when you come to a level of implementing, you'll have walked the same journey with them, and you have responded to all their queries in terms of compliance. At the end of the day, they are trying to comply to the tax obligations, and you need to understand their concerns. You need to address them. You need to be to work with them in this journey of the reforms, and this creates an atmosphere that is very conducive in terms of creating transparency between transparency and engagement between the tax administration and the business community, where we, for example, in Rwanda, we created an engagement with the Private Sector Federation, where we created the Tax Issues Forum. We discuss on tax matters. We talk about reforms in terms of the projects that will be impacting the business community. So that collaborative engagement is what really ushers in a positive atmosphere between the tax administration and the business community. Thank you.
Thank you so much for that response. Please keep the questions coming. Even if you're not able to answer them live, we'll be able to answer and get back to you on the same. So keep the question coming. I've also taken a note of a comment where you asked whether I will share this presentation. Yes, I do confirm that we'll be able to share this presentation. We'll also be able to share the documents that, including the videos that we've played today. So just before we get to closing, in the interest of time, I'll request us to play that video on text technology tools. Obviously, I request us to play it again.
Now, when we're considering At KPMG, our tax technology team is reimagining the tax function with the implementation of technology. Combining KPMG's tax expertise and our data analytics capabilities, our tax computation engine extracts data from your trial balance and ledgers, cleans and processes the data, runs your current, deferred, and proof of tax computations in a matter of seconds. The resulting output files are then analyzed and visualized on interactive dashboards that allow your team to have a real-time view into tax KPIs, obligations, transactions, your income and expenses, providing business value to tax managers, and enabling you make data-informed decisions. Additionally, we reconcile your tax obligations and transactions to detect inefficiencies and late payments, giving you confidence about meeting your tax obligations in good time and remaining compliant. Combining technology with our team's extensive knowledge and practical experience, we have developed tools that automate the process of reconciling your VAT, payee, withholding, and customs tax obligations. This will enable you address your compliance issues with more precision and in a timely manner, including identifying incorrectly filed returns. Tax reconciliation solutions will enable you easily run month-on-month reconciliations, identify overpayments or underpayments and other variances, and avoid the heavy cost of non-compliance that can disrupt your business.
Thank you so much for that video. It was backed by public demand. But as I indicated, we'll share all the materials. We will also share the survey report in a PDF format, and we'll also be able to share our capability statement, showcasing all our tools. And now, ladies and gentlemen, I know it's coming to the top of the hour, and I would like to invite Benson Dongo. Benson Dongo is our Chief Executive Officer in KPMG East Africa, and is a member of the FAM's, that's KPMG Senior Africa Leadership Team. Benson has served across East Africa, and when I say he has served clientele in Kenya, in Uganda, in Tanzania, in Rwanda, in Ethiopia, and he's a familiar face to most of our clients. He understands most of the opportunities and challenges that we face. As KPMG, as clients, and he's placed best to talk about technology, given that he's sitting right at the steering committee of KPMG Future of Technologies. Benson, karibu sana.
Thank you very much, Steve, and good afternoon, everyone. I am very much aware that we are behind on our schedule, on our time, but just allow me to take 2 of your minutes to put it all together. The messages have been put very clearly by the speakers, and it has been a terrific 2 hours spending that time together. Allow me to just highlight some key messages that I think are very important and the key themes that have come out of this conversation. One, it is, if you look at the world operating in today, it has been disrupted significantly. And the key words that have been used in this forum are very, very relevant. When you think about the geopolitical disruption that we have gone through and we continue to go through, including the conflict and the war that is happening around us, the social pressures that come with the issues of the environmental, social and governance issues, the pandemic, of course, all this have created some intense pressure into our organizations and the environment that we operate in. And we have seen and witnessed accelerated digitization, as has been spoken in this forum. which therefore confirms to all of us that the future of tax, as we said earlier on, is here and it is now. It was very instructive listening to the transformation journeys that were shared by some of our clients, and most importantly, the panelists, the revenue authorities that have shared what it is that they have done in the digital transformation journey. And what that means, and what has been highlighted, there are some key elements that we must ensure that we do as businesses. One, it is not in doubt that technology is at the heart of everything that we do. And therefore, our tax technology strategy should be, in my view, very much anchored on what I would expect would be a clear digital roadmap in your organization aligned to the corporate strategy. And what that means is that it will be linked to the key processes, basically front, middle, and back end. That's to make sure that you are able to perform the tasks that you need, drive data-driven decisions. We've had the use of word data, the hiring of the skill sets that you need, be it the use of artificial intelligence, hiring of data scientists, making use of machine learning, Internet of Things. These are all things that we have had that are being used by the entities that have shared their stories and the revenue authorities. So as a business, the things that we see going around us mean that we must be able to, if we want to have a competitive advantage in this environment, invest in technology. That is the only way we are going to be able to ensure that we can manage our tax affairs. As a tax function, every decision that is being undertaken, whether it is a redefining of the business models in our organizations, introduction of new products, there is a tax point. And our view as tax professionals is required. So those disruptions, what they are doing to our environment is that they are changing the global and the regulatory landscape, meaning that pressure is on us as tax professionals in our organizations for you to reimagine your future tax function through new technologies and fit for purpose business models. So your involvement is very critical. And this means that you have to focus in value that they needed. That is the future of tax. You've seen the clip that has been played, which is the KPMG Tax Reimagined tool. This is a tool that has been designed to help us be able to transform our tax function and ensure that we can look from back to end-to-end solution into making sure that we can leverage data to drive proactive tax decision that will help move the organization forward and reduce and mitigate the exposure as we've had. The cost of non-compliance is very, very high. This tool can be able to help you do it. We would welcome as KPMG an opportunity to explore this tool further with you as we transform your organizations into an insight-led organization. It was very fulfilling to listen to the revenue authorities, as the panelist spoke, that there is that transformation into negotiation, to collaboration, to partnership with the taxpayer. So I hope that we can be able to pick that opportunity to discuss and have a common approach with our revenue authorities. So mine is to thank each one of you, our guests who have been so patient and have spent time with us this morning. My most sincere thanks to our panelists, all the presenters, and most importantly also to the team that has made it possible for us to be together, that has prepared this webinar and made it a success. Thank you all, and I do look forward to engaging with you as we explore ways that we can work together as revenue authorities, as in our clients, as you transform your businesses. KPMG is here to walk with you the journey together for better. I wish you all a very fruitful afternoon. Bye-bye.